The European Commission says Gibraltar's corporate tax exemption regime for interest and royalties, as well as 5 tax rulings, are illegal under EU state aid rules. It adds the beneficiaries will now have to return around €100 million worth of unpaid taxes to the ROC. However, the Commissioner in charge of competition policy says she very much welcomes the significant actions taken by Gibraltar to remove the illegal exemptions, streamline its tax ruling practice, and reinforce its transfer pricing rules. Number 6 claims the decision, while negative, has a minor effect. It says the Commission has found errors in relation to only 5 out of 165 tax rulings it investigated, and that none present any serious issues. The government says the decision vindicates Gibraltar's view that there's nothing wrong with its 2010 Income Tax Act. The Chief Minister says the ROC has only been required to make minor amendments to the Act and to place on a more solid legal footing the practice of tax rulings.
Most importantly, Mr. Speaker, the Commission has vigorously rejected Spain's attempt to reopen the regional selectivity issue and has found that Gibraltar, and Gibraltar alone, constitutes the reference framework for analysing any tax measure adopted by the Gibraltar government. This is of great value and importance. It would, of course, have set us up magnificently well for operations in the European single market. The Commission also recalls that Gibraltar has full internal self-governance, in particular with respect to tax matters. Indeed, considering that the entirety of the Act was under examination by the European Commission, the result of the investigation, which in total has taken over 6 years, is a remarkable success for Gibraltar and a massive blow for all those who seek to denigrate Gibraltar as a tax jurisdiction.
Fabian Bigardo says the net result is that the Income Tax Act now enjoys a clean bill of health from the European Commission.